Good day. Ira Epstein of Linn Associates with your daily agriculture wrap-up, and this is for Monday, and we're at the 23rd of September 2019, and we're about 3:48 p.m. Central Daylight Time. As you can see, the stock market an up day. You're up strong in the metals today, and we have a mixed day in the grains. Now, the grains are mixed for a lot of reasons. Corn sales are lacking. I'll show you that all in a moment. We just got the crop conditions report, so I wanted to wait today to get those for you. And as you can see, the report showed corn 57% good to excellent. That compares to 55% good to excellent the last week. Then you get to the other parts. The corn doughing process is 96 for all purposes. That's done. Denting's very close to all done. It's 79%, jumped 11% this week. Maturing process 29% compared to last week, but 69% a year ago. So you still have problems. An early frost would certainly create some issues here is the key. And corn harvest is 7% complete versus 9% expected. So you get one part of the report in corn that the condition was a little better than it's been, and the harvest fallen a little bit behind. Crop conditions for soybeans, 54% versus 54% expected. Setting pods, 34% versus 95% a year ago. So you can see definitely behind crop there. Dropping leaves at 34% versus last week's 15%, but a year ago it was 68%. Then you get to the cotton report, 39% good to excellent versus last week's 41%. So the cotton crop's actually going a little bit backwards, which is a surprise. And cotton bolls were at 64% compared to last week's 54%, and a year ago's 57%. So funny report in here. You're getting maturity in one end, not so good on the other end in the actual condition of the report, crop. And harvest has begun, but it's only 11% complete. Then you get a winter wheat planted at 22% complete versus 18% expected, so that crop's off to a good start in planting. The harvest of the spring wheat is 87% compared to last week's 76%. You're getting near done. But this is something important. The corn inspections for the last week, which we got today on the sales, they were down 45%. Now, Mexico's taking what it should, but we're losing the business is due to Japan and South Korea aren't buying. And South Korea today, folks, had another case of African swine fever. You know, if that should hit America, you would see something dramatic happen. I'm not saying it's going to. But as I just continue to watch this spread and I see that China can't get its hands on everything, you wonder. As you can see on the weekly area chart of closes, we're still over the 18-week moving average of closes, which is an upside bias. Soybeans had been in a corrective mode. You can almost see it right here, and it's trying to break through that. Now, the key in the market's going to be, can it do anything over the 905 area? A pullback under last week's low, I think, would be a very bearish sign in this market, a sign that without first taking out 904 3/4, that the market's sort of giving up on this rally. I am not saying that's going to happen. I'm telling you the what if. When I look at moving averages, you're fighting at this 100-day moving average of closes in green. If you took out this low, the key would be how you'd hold the 879 level, which is the 18-day moving average of closes. In terms of Bollinger Bands, the resistance is 907, and to get to that number, you've got to get through this 904 3/4, which would be considered a very positive move. Slow stochastics, the oscillator of momentum, is overbought. So I have a market in an uptrend that's been fighting a battle at the 100-day moving average of closes. I don't want to see it break through the low of last week to get to the 18-day average, because momentum would then be turning down. In the meal market, today was a reversal, a little bit of a surprise. You had a downtrend going into the weekend. Momentum wasn't oversold. You just made a lower low, then had a rather dramatic reversal, taking out last week's high, in fact, closing up strong for the week. So you're out of the downtrend, you have a higher high, lower low pattern, and you're caught in the sideways action, which is proving to be what? Dangerous. In other words, you don't get the big follow through one way or the other. Actually, I thought you might go back to the lower Bollinger Band. You didn't do that. In the oil market, you have a lower low, higher high pattern, prices act as though they want to get back to that 18-day average of closes and hold there. In the corn market, you see the sideways action. You're overbought in the market. Resistance, 378 3/4. If it breaks out of here, well, we had an office meeting today that if it broke out, it would need something, number one, fundamentally good, not these sales you're getting, that's for darn sure. Then you could be talking the $4 area, but we don't know that that's going to happen. You're acting heavy in this market. In the wheat market, you're starting to break down a little bit here. You haven't taken out the previous low. If the market were to get through 480 3/4, I would think that at that point your momentum would turn down because you've got an 80.11 reading on the close, which means that if you drop it all, you're probably going to lose that embedded reading. When you lose an embedded reading, price and the 18-day average often make a run at each other. You can't get a bear signal in this market. You can get a signal that you're ending an uptrend, as I define that. In the sugar, the open interest and volume, as I said, is shifting every day it's shifting to the March. We'll see if the market can get up to that 1133 area. If it does, I would say that's where the pros would probably take something off the table. They're probably going to roll into the March contract. In the coffee market, need I tell you the battleground since you got to the upper Bollinger Band, this black line, has pulled back to the 18-day average and held it. What is the trend? Well, that's the problem. You have momentum down, the bias is up because you're over the 18-day average and the swing line is down. Let's say that the market is confused. In the cocoa market, now you're starting to step back under the upper Bollinger Band. Once you get these runs, and I explained this last week, these markets don't stay more than 5-6 days over an upper Bollinger Band very often. In fact, it's real rare. If we go back, we can see here you finished 37, and that was under the lower Bollinger Band. Then you got up right here to 2383, and that was over the band. This day was 2394 over the band. That's 2 days in a row. 2401 over the band. Nope, under it by 4 ticks. So you're just back and forth here and correcting. That's the point I want to make. You still have the embedded reading. That rules the day. I would look on pullbacks if they come in to see how the market finds support at the 100-day average of closes. In the cotton market, the market's acting like a market right now that wants to stay in an uptrend with higher lows, higher highs. Momentum had been pointing down. This was your run for the 18-day average. Didn't make it. Now, if you take it out tomorrow, I'd be concerned about the market because taking out the low of an outside day up is often a sign of lost momentum. In the cattle market, this is where I think the pros are taking money off the table in the December contract, and that's the one you should be looking at now. The upper Bollinger Band hit, my rule of thumb, the first time you hit that number, be it to the downside or upside, I think the pros are coming out because the algorithm that is called the Bollinger Band is designed to keep the market doing what? Trading within those bands 95% of the time. Now, the closer the bands are in place, like they are back here, well, that's a little bit different. But when you get them wider, it's often a better signal that that's what the pros are doing. In the feeder cattle, and I've moved to the November, you can see how the market went up today to the 100-day first time and the upper Bollinger Band together. That's where I'm expecting resistance now to show in. And in the hog market, a good bounce. Now, we keep reading about China and how desperate they are buying all over the world pork and beef and poultry because they've got this serious issue with African swine fever, and everything they need they're getting. Why they're not buying stuff through Smithfield, who they own in the U.S., and not shipping it there, I can't answer. I can tell you that today in soybeans, China did buy 35 cargoes worth, and that leaves them with about 35 more to meet the minimum commitment they had told President Trump that they were going to do. Let me bring you up to date, though. If you're an ag trader, one of the things you should be looking at this time of the year are what are the seasonals in the grains, what are the seasonals in the meat markets as we get ready to go into the fall months. Isn't today the first day of fall? I believe it is. And we're talking where's the harvest pressures, what do they do? More research centers, pretty neat. They've been around. I can't tell you the year that we founded. I can tell you I know these people probably 3 to 4 decades, and I'm good friends with them. And I've used their products for many years because it's a great way to look at what's a normal year, what normally happens, what happens, and this is what the neatness of the charts are. You can go to bull years, bear years, neutral years. You can plot them all on one part with their interactive charts, and you get a feel for what is a probability. Now, it's one of many tools. I do not believe that you look at their research and it says, hey, 14 out of the past 15 years, the market has done this. My luck has always been that I'll pick that year it doesn't work. Therefore, I use it in conjunction with other things because at the end of the day, past performance is no guarantee of future performance. It can be an indicator, it can be a tool, but using it beyond there, I'd be very careful. If you'd like to get a free 2-week trial, simply go to our website. You'll see free offers. Click on our free offers. You're going to see more Research Center. Just fill out the info. We'll make sure it gets in their hands. You can also click right up here. It'll take you to our free offers page. I'm Ira Epstein. You have a great day.